As our next speaker, I'm very happy to welcome Martin Leinweber from MV Index Solutions, and he'll be talking about identifying investment opportunities by industry across crypto assets. Enjoy, everyone, and as I said, if you want to reach out, we will do our best to forward your questions to our amazing speakers. And I also want to use the chance to thank our sponsors very much again, our amazing sponsors who made all of this possible. We have over 1,000 viewers, and the stage is yours, Martin.
Yeah, good morning. My name is Martin Leinweber. I'm the digital asset product strategist with MVIS. MVIS is an EU-regulated benchmark provider offering index solutions for various asset classes, equities, bonds, and digital assets. So we do digital asset indices since 2017. So in crypto terms, it's a very long time. My topic today is making sense of the digital asset universe. So how to bring more transparency into the space in terms of segmenting. And so you all know the familiar problem. We just have too many tokens out there. So you see, no matter where we are in the cycle, whether we are in the bull market or bear market, we just have a growing number of tokens. So at the moment, we have 8,000. That's the data from CryptoCompare. But if you look at CoinMarketCap, for example, we have, I think, 13,000, CoinGecko, 14,000, you name it. So it's an ever-growing number. And you also see it in terms of Bitcoin dominance. So that's the market cap of Bitcoin in relation to the total market cap of the crypto market. And you see we have a decreasing share over time. So roughly speaking, we are around 40% Bitcoin dominance. And I think the old narrative that in a bull market, the Bitcoin dominance is falling, and in a bear market, it is rising again, is wrong. Yeah, so you see we are in a crypto winter at the moment, and the Bitcoin dominance is just hovering at 40%. So there must be other coins, other use cases, other chains, which are of value for investors. And so our clients asked us to come up with a classification scheme. So there are a lot of taxonomies out there. Most of them are very regulatory driven, or have focus on the technical backdrop. But we thought it makes sense to focus on the value drivers of the universe. So what's the business case? What's the end user demand? And so we identified 8 categories in the digital asset space. And what we are doing here is, at the moment, we are looking roughly at 350 to 400 tokens at the moment. And whenever a token is larger than $250 million market cap, we do the deep dive. So we read the white paper, we read third-party research, we even look at the Discord channels, which I hate them, so it's really hard to get information. But anyhow, so we have to put the token in a specific bucket, and these are exclusionary categories. So we just put one token in one bucket. So this has advantages for performance attribution, for example. The red boxes you see are, in our opinion, the most investable ones. And we've launched indexes on them. So what do we mean with investable? So it's a process of exclusion. So for example, store of value, it's mainly just Bitcoin and its derivatives. So wrapped Bitcoin, for example, or some gold-backed token. But it's just one coin, so it's not worth doing an index on it. The same with stable coins. It's mainly pegged to another asset class, mainly to fiat currencies, so it's not a use case for having an index there. Then we have the payments category, which in theory are supposed to be for micropayments. But if you have a closer look, most of them are Bitcoin forks, so Bitcoin Cash, Bitcoin SV. We have the meme tokens everybody hates, Doge, Shiba Inu. And then we have the privacy coins, such as Monero, which are hard to invest from a regulatory perspective, at least for institutional investors. So We don't have that. And then what we're currently developing is an exchange index. Yeah? So the centralized exchanges, the FTX, the BNBs in the world, we are currently developing that. So now I come to our 4 main indexes. So the most popular one is the smart contract platform. So that's the operating system where all the third-party apps are built upon, and very, very large sector. Then we have another very popular one, it's the media and entertainment sector. It's not just the metaverse, so it's a little bit broader. So it's everything related to content creation, gaming, social media. Another sector is decentralized finance, you're all familiar with. So the new decentralized system builds upon the smart contracts. And last but not least, we have the infrastructure applications. So these are tokens focused on specific computational tasks, such as decentralized computing, decentralized CPU, indexing, querying. We have the oracles there, so bringing outside data to the blockchain. We also think that the layer 2s are part of the infrastructure. So that's the infrastructure application category. In terms of size, that's very interesting. So maybe also not a surprise that store of value, Bitcoin, is by far the largest category. But interesting to see that smart contract platforms are on number 2 with above 600 billion market caps. And everybody is talking about the flippening of ETH overtaking Bitcoin in terms of size. But I think in the next bull market, we will see smart contract platforms in general overtake Bitcoin. And what's also eye-catching is that the other sectors are really, really small. So DeFi and media entertainment, for example, roughly speaking, have just over $30 billion in market cap. So you see there's a large potential there sleeping maybe for the next bull market. And so that's a very interesting figure, I guess. So we don't stop there. We have developed the 8 categories, but we finalized, for example, 25 industry groups and 66 industries. And this thing is just broadening and getting bigger by the day. So, for example, we have DeFi as a category, decentralized exchanges as an industry group, and then we split it up into automated market makers, order book-driven exchanges, cross-chain exchanges, etc. So in terms of investability, we still think it's too early for the subsectors, so we have clear focus on the categories first. Now I think it comes to the most important slide. That's the cumulative performance over 1 year for the different indexes we have. And I have to say, I always get asked if we are in a bear market in the crypto space. And I think the crypto space is the only market where somebody asks, after having a 50+% drawdown, are we in a bear market? And it's a good question because, yes, we are in a bear market with the exception of smart contracts. So they are still positive. You see it, the light green line is smart contracts, dark blue is, for example, Bitcoin. So even that is negative. And all the other sectors are heavily down. But yes, what you also can see is that you can beautifully play the narratives there. So last year in summer we had the layer 1 wars. So it was everything about being cheaper than Ethereum, having more throughput, so buying the Solanas, the Avalanches, etc. Then in Q4 last year, Facebook renamed to Meta, and it was all about the metaverse. So our media and entertainment index went through the roof. But you can see overall, the sector is also down. And now I think it's more about store of value again due to the Russia-Ukraine conflict, where people ask, do I own really my money? Do I really have access to my assets? So maybe it's time for Bitcoin to shine again. And the recent day, last week, we see that the market is doing a turnaround. But with that perspective in mind, for investors, it's just easy to gain the big picture of the whole crypto market. So you can ask yourself, why are smart contracts so strong? And maybe DeFi, the gray line, why is it such a poor performer? And I think it's an easy answer for smart contracts because they have a strong TAM. So whenever there's a transaction on the base layer, they get a small transaction fee. So you just have to bet on a growing ecosystem. Yeah? You don't have to do a dedicated bet on, is DeFi next? Is it an NFT story? Do we have a comeback of the metaverse, etc.? So for investors, it's relatively easy. And in addition to that, very often you get a staking yield, so you get cash flows. That's very interesting. And on the other hand, why is DeFi, although we have a lot of value locked in those smart contracts, it's really outstanding that DeFi is performing very poorly, even on a longer time horizon. So what we did on the next slide, and I told you that we are currently developing a centralized exchange index. We compared the largest subsector of DeFi, decentralized exchanges, with their centralized competitors. And what you see, by the way, is very high performance dispersion again. Although both are in the same market environment, so we are in crypto winter, both have faced the same volatility in terms of the assets they trade, and I would say they even have the same clients. And yet one group can materialize shareholder value or token value, and the others don't. And that's very interesting. So you as an investor, you can do the drill down then again. And let's take, for example, Binance. It's the largest token here in the index, and by the way, all indexes are kept here at 30% maximum weight per token. So we want to have diversification. Otherwise, Binance would make up 80 to 90% of that basket. So let's focus on Binance. Binance is a company. They have a CEO, they have equity, debt, and a hybrid pass-through token. So what Binance did is they issued a fixed amount of a BNB token and encouraged their clients to buy this token. So suddenly the client is a member with some benefits. So you have reduced transaction costs. You can use your BNB token as collateral for options and futures. Even if you're traveling throughout Asia, you get a discount with the BNB token. And I think the most important one is that Binance is doing a buyback. So comparable to a share buyback. So 20% of the profit goes to the token buyback. And clients love that. And if you compare that with Amazon, for example, an Amazon Prime user doesn't get any economic benefit from the growth of Amazon. And the Amazon shareholder doesn't do anything for the growth of the user base. So with the token, you have both. Yeah, and that's, I think, the reason why Binance is one of the fastest growing unicorns with a market valuation of between $300 and $400 billion. So we have a perfect stakeholder alignment with these tokens, and suddenly an intangible asset, so community value, brand, suddenly becomes tangible via the token on your balance sheet. And that's a very powerful thing. And the other exchanges also copied that successful theme, so whether you look at FTX or Bitfinex and so forth. On the other hand, the decentralized exchanges, they are open source. So it's just fork and rebrand. Yeah, you have a lot of copycats. Suddenly you have another exchange with lower fees. You have a race to the bottom for the fees. Somebody's sucking your liquidity out. So suddenly you have to do liquidity mining again. So you have to issue more tokens, so you're diluting your investor base. You're facing hacks, for example, and you have this regulatory Damocles sword overhanging, the SEC stating that they want to bring some protocols down, and that's also easier for the centralized exchanges to handle the regulatory pressure. So now I see some angry faces. I'm not against DeFi, so the use case is great and it's here to stay and for yield purposes great, but you see that some tokens, some protocols have just problems to bring you shareholder value. And things can suddenly change. So, for example, we see a lot of M&A going on in the DeFi space. We even have some activist shareholders, activist hedge funds, for example, for SushiSwap, pitching for a new governance protocol. And maybe we have new catalysts in terms of the layer 2, bringing the fees down for DeFi. And suddenly you have a new use case, and we have DeFi summer again. But I hope it became clear that with these indexes, it just brings you more transparency. So instead of looking as a handful of tokens randomly selected, you have a systematic approach to get the big picture right and then develop your own investment thesis. Yeah. So with these indexes, you can build a lot. And if you look what the smart money is doing, so we've analyzed what the top 50 crypto funds are doing, just based on Messari data. So that's just the liquid token investments, yeah, not that we see equity money and we don't know the weightings. That's just the number of tokens added up. You see the most favorable categories are, again, decentralized finance. That's the gray area, 37%, and smart contracts. So maybe it's good to have a barbell structure. Yeah? You're doing the momentum play with the smart contracts, and you're betting on mean reversion via the decentralized finance. What's interesting that in terms of token allocation, the media entertainment sector, where metaverse is a part of it, it's just really a tiny share of around 5%. So going forward, maybe we see more investments there. In terms of the top 5 held token, it's also not a surprise. We see that Polkadot, for example, a smart contract platform, is the most held token, followed by other smart contract protocols, Near and Oasis Terra. So RVF is infrastructure play. So I think with the help of these indexes, it's easier for you to get the overall theme and bring you just more transparency into the crypto space. Yeah? And instead of just looking at Bitcoin and maybe Bitcoin and Ethereum. So I encourage you to go to our website, to download our data. So we are very transparent. You can download the index data, the performance data, the compositions. You can play around with them and develop your own investment thesis. Maybe do some proper performance attribution. And yeah, maybe you want to buy an index. Could be, just saying. At the end of the day, I think we have a booth over there. So if you are interested in it and have further questions, just stop by and say hello. We appreciate any question. And yeah, so that's the end of my presentation. Thank you very much.